Okay, so foreclosure timelines have increased a little bit, and that is, I guess, some of the fodder that some of the pro housing people are saying why we're not going to have a housing crash or crisis because foreclosure timelines are increasing. So we'll talk about that today in detail. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is the 20th of April. Hope you're doing well. Randy Patrick here, putting the realism back in real estate. So why we're talking about this is because Adam Data Solutions released some information. But first of all, if you're in the Tampa area next week, I will be one of the keynote speakers on an event on Tuesday. And that's kind of a fun thing. So certainly we're going to talk about profiting from the housing collapse 2021. So that's going on here in Tampa. But here's the scoop. If you're not in Tampa, you can still log on and watch it from a virtual perspective. What I'm going to do is I'm going to put the link in the section, in the info section of the video, and also in the community tab. So listen, you can check out what's going on in our neck of the woods. And this is a new group that's in town that we're working with, doing some real estate investment clubs and meetings. So please check us out. And again, I'll be talking as one of the keynote speakers on the 27th of April. It's Tuesday, 7 p.m. is when it's going to start. You can come to us locally here, and there'll be a virtual opportunity to watch. So there you go, guys. So please check us out. So yes, Adam Data Solutions puts out their, I guess you could say, first quarter foreclosure activity, and U.S. foreclosure activity continues to increase despite government moratorium, which is kind of interesting. So why would things increase? Well, there's a lot of reasons for that, which we're going to get into. But one of the things that I've been hearing is that through some information that people pass on to me, etc., and I guess it could be apparently played in other videos in the housing industry that's out there, because I don't really watch them. I see some of the thumbnails and stuff, of course. But some people are stating the fact that we're not going to have any issues. Why? Because of the forbearance, because of the things in play, because it's taking so long to actually foreclose. Well, yeah, I guess you could say the average days to complete a foreclosure are most likely increasing due to the fact that a lot of foreclosures are just stalled. They're not moving forward. And over the past year, because of the coronavirus pandemic, a lot of the processing of foreclosures and especially the local court systems really haven't been fully staffed. They've been working remote, things like that. So you're going to see the fact that is changing the environment. But please believe me, that's not going to continue. Once things open up more, I can already tell you things are changing right now in our area. So please don't think that's going to save the industry as people are saying right now. Highest foreclosure rates are in Delaware, Illinois, and Florida. So basically, they look at foreclosures per housing units. So we see an increase, in some of the activity from the fourth quarter of 2020 to first quarter 2021. So it looks like Delaware, Illinois, and Florida have the highest foreclosure rates. Among metropolitan statistical areas with at least a population of 200,000, highest foreclosure rates are Lake Havasu City, Arizona, Provo, Utah, McAllen, Texas, Shreveport, Louisiana, Atlantic City, New Jersey. So they break it into like statewide. So you got Delaware, Illinois, Florida. There's your metros with more than 200,000 people. Now the other major metros with at least 1 million people include Cleveland, Ohio, Birmingham, Alabama, Jacksonville, Florida, Miami, Florida, Riverside, California. So again, we see some trends that are moving foreclosures forward. I guess foreclosure starts increase 3% from last year. So you have foreclosure activity, which can be starts, auctions, things like that, REO sales. Now, foreclosure starts are typically filings, like in other words, we're starting the process. So really up 3% from the previous quarter, but down 78% from a year ago. So yeah, that's going to pick up the pace. I can tell you that we're seeing some more filings down here in Florida for sure. So again, everything's going to change. So states that saw greatest quarterly increase in foreclosure starts were California was up, Ohio was up, North Carolina up, Virginia up, and South Carolina up. So you're going to see certain things here and there. Bank repossessions, greatest number of REOs in Q1 2021 were Florida, Illinois, California, Texas, and Arizona. And again, a lot of these Sunbelt states, and also the fact that populated and also usually have a lot of foreclosures. That's the way it goes. So REOs are real estate owned. bank is taking them back at auction. Whether they're going to come back out to the marketplace, who knows? But this is what's going on in those states. This is, again, sort of focus on this. So the average foreclosure timeline increase is 8% in the first quarter of 2021. So properties foreclosed in the first quarter were up 8% from an average of 857 days for properties foreclosed in 2020. Up 38%. Oh, sorry. They're up to over 900 days. Okay, 930 days is what it is, and 8% above the previous quarter, up 38% from this time last year. So why, people are talking about this going, okay, here's the reason why. If it's going to take how many years, like 930 days, let's divide it by 365. So we're talking, just under 3 years here. But the whole point that what they don't understand is that, everything in real estate is drag along, tag along information. What I mean by that is we look at comparables that happened, 30 days ago, 60 days ago. We're looking at statistics that happened last month, last quarter, etc. Well, what people don't realize is that, as I've mentioned this many times in previous videos, the lenders want to foreclose. The lenders want to move these forward. One of my last videos talked about the state of Florida, how the Florida Supreme Court is basically saying, we're not going to hold up this type of stuff. As a matter of fact, we're going to move these things forward and keep them moving at a faster pace because we don't want the backlog. So my point again here is that, certain groups, courts, lenders, whatever, they're envisioning volume, and that to me is a telltale sign saying things are not going to be as rosy as we think they are. Now, I'm not a doom and gloomer. I'm trying to be realistic here, and that's kind of my perspective because I've seen and been through the entire last housing crisis. We saw what happened, got a lot of experience through that. So here's the scoop. So when you see 930 days, well, hey, if I'm in forbearance and I can't, deal with my start making payments when forbearance is over, and I'm in Florida. Okay, am I going to have 930 days to sit in my property on average? So therefore, it's not going to be an issue. I don't care. Well, that's not going to happen because again, like for example, in Florida, as I mentioned, they're moving it forward. But also, I saw prior to the pandemic, I was seeing a lot of foreclosure cases getting through from start to finish in 6 months or less. Reason being because there's no point in holding stuff up. Courts don't want them held up anymore. The lenders don't want them held up. So things will move faster. This is just an anomaly because of what's happening over the past year with COVID. So again, this is not going to go on. You had the foreclosure moratorium, CARES Act, the whole bit, and people are saying the longer it takes for foreclosure filings to happen, etc., the more time it gives homeowners to fix their problems. I agree, which is a great thing. Let's do that. But again, look at the properties foreclosed. Arizona, almost 2,000 days. Jersey, New York, Pennsylvania, Hawaii. I mean, that's these are a number of years. That's going to change, okay? And which is kind of weird because it's based on the political, not the political, but the state law structure, judicial, trustee state, whatever in each state. So Arizona, I'm surprised that it's taking that long just because Arizona is a trustee state and it shouldn't take that long. But Pennsylvania, Hawaii, New York, and New Jersey, they're all kind of judicial states, which typically take longer. States with the shortest average time frames to foreclose: Virginia, West Virginia, Montana, Nebraska, Mississippi, Missouri. So these are places that have more of a trustee style state. So they give you a notice of default and they can move to a sale date fairly quick, as opposed to going through more of a court process in the judicial state. So just goes to show you the difference there. So when you start to average things out, you go, hey, it's averaging 930 days. Well, some states are higher, some states are much lower. That's the average point. So you got to figure out where you live or the properties where you want to buy, where they're located, to see the speed and time frame of foreclosure sales. But realize that as a whole, as a generic statement I'm making here, the foreclosure timeline will be speeding up, and we're seeing that actually happen right now. Some of the takeaways for the first quarter, one in every 11,500 properties had a foreclosure filing. Highest foreclosure rates for Delaware, Illinois, Indiana, Ohio, and Florida. Typically, Florida's always up there. So we always see Illinois up there as well too. X number of properties started the foreclosure process in March, up 7% from the previous month, but down big time from last year. So we know it's going to pick up. And again, just everything is, the completed foreclosure process is down from a year ago. So if we're trying to compare from last year to this year. Really, that's why the numbers are skewed. Doesn't make sense. All right, interesting enough here. Oh, by the way, if you're not already a subscriber, if you could please help my channel grow and hit the subscribe button, I'd really appreciate that. Thank you very much. All right, we're talking now about the foreclosure zip codes of the highest foreclosure rates, and I'm not going to bore you with all the details here about the reasons why, but clearly there's some zip codes have more activity than others. We're looking at some locations that had some increases that were interesting. Were California, Ohio, North Carolina, Virginia, South Carolina. All right, but I'm going to go right to the numbers here. This is actually your locations that had, I guess, just the top 10 zip codes where you've got an activity that's the highest foreclosure rates per zip code in the country. So what we're looking at here is we are looking at Sebring, Florida is your number one location. So these are I guess you could say rates. So it's zip code. It's one in, like, so Sebring basically had a foreclosure rate of 1 every 70 units. So the specific zip code in Sebring. Then you've got a Kingman, Arizona area, right? 1 in every 78 units. Looks like Bourbonnais, Illinois, 1 in every 92 units. Vero Beach, Florida, 1 every 217 units. Mission, Texas, 1 every 354 units. Homestead, Pennsylvania, 1 every 391 units. Maple Heights, Ohio, 1 every 397 units. Dayton, Ohio, 1 every 467 units. And Newport, Kentucky, 1 in every 484 units. And we also have Edinburgh, Texas, 1 every 513 housing units. So what this basically shows you is that for whatever reason, these zip codes have some uniqueness about them, and we had a lot of activity as far as filing was concerned in the first quarter of 2021. So I do find it interesting that every so often we'll see the typical Sun Belt states, and certain locations like Illinois and New York will always have a significant amount of filings regardless of what's going on. And when you hit this sort of area here, you get these outliers like a Kentucky, maybe a Texas here and there, in Arizona, Pennsylvania, but typically your Ohio's, your Florida's, whatever. You're always going to see Illinois. We're always going to have a lot of northeast too, Maryland area, Delaware, New Jersey, whatever. Always are up there. But again, specific these are just zip codes here. So So to me, what does that mean? Well, focus on the zip codes. If you're looking for properties, either for investment or to purchase properties, chances are if these zip codes are having issues for whatever reason, those will result into, I guess you could say, future foreclosure opportunities. Now, if foreclosures are being filed, then to me that indicates that things are opening up a little bit, and a lot of these, I guess you could say, foreclosure filings may not be regarding mortgages that are protected under the CARES Act or under the FHA moratorium and things like that. So there's going to come a point in time when the normal lenders, if you have a mortgage you're not paying on, that's not covered by any of those moratoriums or acts, then the lenders are going to go, we've waited for a full year, we've been great people and let you stay in there, but now we're going to start to file and get these properties back. So this is what's going to happen as time goes on. So things will start to speed up. As I said, foreclosure filings are quietly increasing. More properties are scheduled for foreclosure auction, which I'll show you, not just vacant homes. One of the comments in the article, which I'll put in the information section here, is the fact that they were talking about, the foreclosure moratorium on government-backed loans has virtually stopped foreclosure activity over the past year. So the dude from Realty Track, but mortgage servicers have been able to begin foreclosure actions on vacant and abandoned properties, which benefits neighborhoods, etc., and communities. It's likely that these foreclosures are causing a slight uptick in what we've seen over the past few months. Well, I can tell you that, at least in our area down here, it's not just abandoned homes and vacant properties that are going through the foreclosure process at a faster pace. It's, again, properties that maybe don't fall under the moratorium and court order protections. That's what we're seeing. So it's not just vacant homes. That's kind of a generic statement that they're making here. So it's not just vacant homes. We'll see that increasing. What we're also seeing an increase in is homeowner association or condo association auctions. We're also seeing tax deed auctions increase. So, these are sort of two segments of the distressed property market that don't fall under any sort of, coverage, we can say, with mortgage foreclosure, FHA, things like that. So, moratorium. So that's why we're going to see some more opening deals here. For example, this is a screenshot of the auction calendar for Miami-Dade. And, here's what's going on for the month of May, because April's almost over now. So far, scheduled for the month of May, and this will increase, like the latter part of the month will increase as far as scheduled foreclosures. 154 mortgage foreclosures are scheduled, and right now there are currently 100 tax deed foreclosures that are scheduled. So that's not like it's 5 or 10 or 20. We're talking 150 plus. So we're starting to see things pick up in some of these locations. This is Broward County. 117 mortgage foreclosures, and they don't do tax deed on this calendar. They have a different calendar, but you can see that in April there were 30 tax deeds that went through. Actually, they're actually going tomorrow. So far scheduled, in May, there's 23 tax deed foreclosure sales. And in June, there's so far scheduled 45. So this is stuff that's happening right now that's going on in the industry. So you got to realize that as much as we're seeing some stalling of foreclosure processes, and with the government stuff and things that fall under moratoriums, we're starting to see in certain states things picking up. Going, if we don't, if there's no rules that say we have to follow the guidelines, then let's start the foreclosure process or go to sale and things like that. So things are picking up here, and this is where the deals are going to be. Now, I want to show you some historical stuff here too. So I like to go to Miami-Dade as a resource to illustrate what I'm talking about, just because they produce information, all right? So they make it readily available that you can actually look up and see for yourself. So this is the number of filings. So, what you just saw, if I go back, if this is foreclosure auction calendar. So let's be clear here. So these things are basically the calendar of what's going to sale, all right? So these people are not obviously covered by any sort of moratorium. The lenders have pushed it through the court system. The courts have opened up, and these are going to a foreclosure auction on those days. So this is kind of like, there's no protection here for these people. They have to figure out their own situation and remedies if they can get the deal postponed, which typically that's how we help them in our business. But if you go to what's going on, so that's foreclosures that are going to auction. These are filings. So again, going to Miami-Dade County here in Florida, just so you're aware that 142 new foreclosures were filed in January. 143 were filed in February. Now let's compare to last year, 2020, which you can see on the screen. So here we are. That's about probably a third. We're talking maybe a third of what was filed last year, or maybe almost, we're talking a third to a half in that range, maybe 40%. So it's not back to the volume of 2020. Especially January, February, March. You can see where that was at as far as filings are concerned. So January, February, March, it's obviously 350 to 400. 350 was kind of the average. Obviously, you can see April, May, and June were down because when COVID hit. July up a little bit, August up a little bit, September, October, November, December, kind of that 140 to 150 mark. Year to date was 2179. So we're still for 2021 running on much more reduced, probably, as I said, by 40-50% reduced amount of filings. So we know that's going to grow and things will open up. So we'll start to see that take place. Just comparatively speaking. So obviously, if you take a look at 2020, was just under 2,200, foreclosures were filed in Miami-Dade. And if you look at that, you're like, okay, this is, majority of the months are, pretty much, 9 of the 12 months were COVID, affected volume. Let's take a look at the year before. Well, the year before showed that in 2019 that we ran in Miami-Dade 5,300 plus foreclosure filings. So when you take a look at stuff that's available, so I look at 5,300 in basically 2019. A lot of those may not have gone to auction in 2019. Depends on when they were filed. They would have been scheduled for auction or moving through the court system for 2020. But guess what? That didn't happen because of everything being slowed down. So you probably have the majority of those 5,000 that were filed in the Miami-Dade County in 2019 still sitting around, in kind of a, like we'll call it suspended animation during 2020 and also now for 2021. And you added about, almost 2,200 filings in 2020 anyway. So when you take a look at the volume there, so to me that's an example going. So in the matter of 2 years, well, a matter of 2 to 3 years, we'll say 2 years, 2019, 2020, we basically have about 7,500 foreclosure filings in Miami-Dade County. So do they all exist? Are those people, could they sell their homes? Like, we don't know. Who knows? But so that's why I'm trying to say, there is this underlying shadow inventory foreclosure opportunity volume behind the scenes, which to me is just very difficult to qualify. But when you see something like this, this is what has to give you hope to say, okay, well, at least this is one county that actually publishes their data very nicely. Most counties don't publish it, and you got to do use other sources to see what's going on, et cetera, in the data world. But that's what's going on. So at least I want to show you the fact that stuff is happening, and stuff will happen because there is a backlog, there is volume there. And when people are talking about, well, we're not going to have a housing crash in 2021 or a crisis because, hey, it's taking 850 to 930 days for a foreclosure to process. Therefore, that's 3-4 years down the road. It's not going to happen. Listen, valid argument, valid reasoning, but we know that that's historically things are changing and things have changed. And when the courts pick up, stuff's going to fly a lot faster. Mark my words. So it's not going to be this, we'll see this housing crash 5 years from now. It will happen sooner, and the stuff will open up a lot sooner than people expect. Who it's really going to shock is the homeowners. The homeowners who think that they can sit in their homes. If you're a homeowner not paying your mortgage, you may go, hey, you just showed me I've got an average 4 years. I can sit in my home doing nothing. Well, that's maybe in the past. That will change for the future. I'm telling you that right now. That, the lenders are prepared for this. The courts are prepared for this. As I said, even certain courts, even like in Florida here, they're actually saying we're not going to slow this down. We actually are going to. They're implementing ways to expedite this process, which will catch people unaware, and that's where the opportunities lie. All right. So just something to think about and chat about here. So again, I'm just trying to debunk what I hear, what's going on in the industry here. So what's next opportunity? Well, I said more distressed properties are going to come out. Owners will need to sell. The longer they wait to sell, the more it's going to cost them. Investors will start to liquidate. They're doing that right now. We'll see an uptick in foreclosure auctions, which we're seeing now. We'll see an uptick in foreclosure filings, which will start shortly. Eventually, we'll see more short sales listed. Eventually, we'll see an increase in REOs available because they'll come out the back end through the auction process. More will be available than predicted. We're not seeing the true numbers of what's happening at this point in time. So keep that in mind here. Why do you want to get involved in the distressed property? Because look, here's an example of short sales in my area in January 2021. Take a look at about a 32% discount of median price for a traditional single-family home versus a short sale, and it's around $90K in equity. So this does ebb and flow, up and down, a few percentage points here and there based on the foreclosure activity. But the point is, if you look at that chart, and this is just single-family for my MSA here. It's not the entire, villas, townhomes, condos, mobile homes, manufacturing, whatever. This is just single families, all right? So when we have 371 traditional sales in January and only 21 of those are short sales, well, yeah, okay, a little bit of skewing, but it just goes to show you that nobody's doing this business. Nobody's going after short sales. And if I go and show you, if you take a look at those type of numbers of what's backlogging and the potential volume, this is where the opportunity is. This is what you have to do. This is what we focus on and what you should focus on as well too. All right. So that's why there is hope. Just, you got to hang in there. If you want to find out about, get the best location or best information on pre-foreclosure or auctions, go to gethousingdata.com. I've partnered with foreclosure.com. Go to gethousingdata.com. They're the number one premier service for distressed property listings across the board. You can check out what's going on in your area to see what I'm talking about so you understand what's happening in the marketplace. A lot of people are just being fed the pro-housing rhetoric by a lot of different people out there, whether it's through the videos or through mainstream media, etc. I'm here to basically say, it's not doom and gloom. We don't look at it as doom and gloom. We look at it as opportunities to push prices down so more people can actually afford homes. All right, that's how I look at this. It's not the fact that we're going to have it's going to be chaos. It's the fact that now you can buy a property and not have to overpay or stretch your financial limits. That's how I view things here. So, all right, guys. So, hey, if you want more information, give me a shout. Connect with me. There's my email. That's the best way you can hold me. I'll reach out to you afterwards. Give me your cell phone number so we can text, etc. If you want information on doing deals down here, deals other places in the country, selling your home, buying a home, training that I have for investment opportunities, short sales, stuff like that, zombie foreclosure stuff, give me a shout. That's where to get a hold of me. All right, guys. Look forward to speaking with you. Hope everyone's doing well and had a good week. I look forward to speaking with you shortly.